Good afternoon, everybody. Welcome to Trader Merlin Show for your Monday afternoon edition. Hope you had a great weekend out there. It's survived the ice age. Good to see you're still kicking there, Dan, with all the cold and everybody else. It was a beautiful day, beautiful weekend out here in Southern California. So y'all need to move over here to the warm side. I know we got some messed up politics, but we definitely have weather that is, fantastic. All right. I didn't even get everything all set up here today. I've been slammed. Unfortunately, some things happened in today's market that I really wanted to capitalize on, and I missed it because I was busy. Topic for today. I've been actually kind of waiting for this moment, honestly. The topic for today is metals shooting star. Yes, I am going Johnny Cash today. You guys see the all black look. I don't know why. But anyway, metals shooting star, right? This to me was the story of the day. Certainly there was a lot of other things to talk about from market perspectives. We had a lot of things moving in opposite strange directions that I did not anticipate happening. However, let's check out this price chart. We talked about this on the show last week where some of you were saying silver getting to $100, and I actually was on SLV, and Big Ed was like, no. Look at the futures, right? It's like, look at the future side of things. Yeah, we were well above the 100 mark on the futures, but today we had a huge gap up on SLV. We hit a high point intraday of 106.70, but look at the chart formation. This is the Gollum effect. I don't know why I just said the Gollum effect. I guess it's because I like going, my precious. Ooh, can't even do that with a sore throat. I got to stop doing that. Anyway, you guys all know that my single favorite pattern in all of trading, without a question, is the shooting star. The shooting star, well, the hammer actually is probably a better one, but they're both equal in my love category. And the reason I love a shooting star is because if it's done correctly, it's after a significant move up of emotion and impulse. And you guys can see that clearly silver, no matter where you decide to draw this trend line from, has been on a fantastic rally impulse move. So today you have this long green candle. It was a monstrous green candle. At one point today on SLV, if you were to just calculate pure percentage gains, you're looking at almost 15% gain intraday, one day for silver. Granted, it was over the weekend, but excuse me if I intermittently cough. It's still lingering there. So you have this big green candle, and at the end of the day, it ended as a red candle, meaning it closed lower than it opened. And not only that, it closed the very bottom end of the range. So by itself, you guys know the criteria that I look for. And again, everybody looks at things differently. I look at that candle, and by itself, I'm like, oh, this looks really good. But as Les pointed into the chat, just typed in the chat, he says, what was the volume? This to me is the kicker, because typically when you get your largest spikes of volume, that's the turning point. That's the moment where people have crescendoed in. They've all piled into silver. I received multiple messages today about people asking me if I bought silver. And one of them is a student who trades a little bit. The others have nothing to do with trading and investing. It's the shoe shine analogy that you always hear. A guy that polishes your shoes giving you stock advice, it's time to run the other way. So here is SLV. By itself, a great shooting star formation. How would we trade that? Well, you would look at the low of today, put a line across the, this is the simplified way of doing it, right? You would just say if it breaks down below 96.51, there is your short entry. Then you add on volume. Hallelujah, hallelujah. I know the podcasters can't see this out there, but volume. Friday was a high spike of volume for SLV. It did 143 million shares on Friday. That was a high spike. It's one of the highest we've seen for months. The highest spike of silver that we've ever seen on SLV ever was back on January 14th, and that was 177 million shares of SLV traded. Today, remember, 177, all-time high intraday or volume for one day for SLV. Today, 385 million shares traded of SLV. That is a climactic moment. That is capitulation. That is the moment where everybody and their mother's like, I just got to buy some silver. I'll bet dollars to donuts and pretty much anything that you're going to see not only silver correct tomorrow, but a few days of correction on this one, which I think many of us have been expecting. It's the nature of price action. It's been way overdone. I don't think that the rally is over for silver. Please, let's be clear here. I think silver has Still upside move to go, but it's just due for a pause. Even a 100-yard dash guy takes a break at the end of 100 yards to take a breather. So maybe I bought those from you. Oh, you guys are selling puts? Garfield says, I sold 2 puts on SLV this morning. You sold 2 puts, huh? Whoo, boy. Yeah, that's a risky spot to be in. I think your higher probability is to be buying puts here. Selling puts right now, you're on a pretty good chance of being exercised on that one and being put those shares of SLV. Be careful and make sure you have a stop loss in place because realistically, you have a lot of unfilled gaps on SLV. You notice that obviously today is an unfilled gap. The day before that was an unfilled gap. We have an unfilled gap going all the way back down to $80 from January 16th and unfilled gaps all the way through January that could be filled. Now, where do we go from here, right? What's the realistic approach to calculate a pullback here? And there really isn't one, honestly. What a lot of people do is they'll take Fibonacci and they'll go from, the last big impulse move up, which I would argue has been this one because there's no big pullback, and that takes you from November 21st to our peak of today. Well, if we get a Fibonacci retracement, just a simple 38% retracement, which would be a normal, you're looking at $82 on SLV. Unfortunately, I did not get puts today. I wanted to buy some puts on silver and on gold, but unfortunately, I did not do it. I'm kicking myself, and it will probably not meet my criteria for tomorrow, right? The criteria for me is it needs to open up above 96.51 tomorrow. It's got to open up above that and then start to traverse down below it. It's already down another 3.77% in the after hours. So Rob says a gap trap below. Well, there's just a lot of gaps that will probably fill. And it's about time. This thing needs to take a breather. But watching that volume spike today is just incredible. 386 million as we speak shares on SLV traded, which is well over double the highest ever for SLV. Now, is it just silver? Oh no, silver was up 5.84% today, at one point up 15. What about gold? Excuse me, I know I'm going to keep coughing. Now, gold on GLD doesn't have the shooting star. On GLD, you have just a spinning top. Depending on what happens tomorrow, this pattern could be what's called an abandoned baby. I know, these crazy Japanese candlesticks patterns. An abandoned baby would be where you have a price gap up, so like we did today, and it doesn't touch the previous day at all, which would be true for today. And tomorrow we would have to gap down below the low of today and keep on selling off. That would be an abandoned baby pattern, which is a strong reversal pattern. And you look on gold, you have a massive gap back to 422 on GLD. 422 would be a drop of 40 points. That's roughly 9% decline from where we are at as of close today. And we're already down almost 1% in the after our session. Jeff, I don't need a baby. Leave it, the abandoned baby. So when you look at the future side, you do have a great shooting star. And notice the volume. Not as climactic as silver, but definitely an elevated volume spike. So silver is really the one that I'm looking at for tomorrow as a great shorting opportunity. And we shall see if that ends up. Holy cow, Dan, you were a busy man. 11 kids? Whew. Here I am regretting that I don't have any children. I'm like, I just want to have some kids. Just one would be great. And Dan's over there. I got 11. You want to loan me one, Dan? My goodness. All right. So from the technical perspective, you look at what's going on with silver and gold. Huge rallies, unbelievable rallies, monster opportunity for shorts here tomorrow. Now, is it just gold and silver? No. Look at the chart here of platinum. Platinum has a reversal pattern as well, which I would argue is even more ominous than that shooting star because this thing was it gapped up, had a big green candle today, and that one transaction just erased that was bizarre. Let me put this to a 1 minute time frame. You guys all see that? That thing changed instantly. Huh. That's weird. Some bad data just came through. This candle should be a very negative looking candle today. I'm not sure why it just jumped up like that on the daily. Huh. Yeah, it's currently not trading at these prices. It's much lower. So I'm not sure what's going on there. It just had a price print of 28.78, but the bid in the ask right now is 2,542. So we are currently way down here on a big red candle, which would be an engulfing pattern for platinum, also very bearish. And then you had palladium, which is the only outlier here, even though You look at the prints, you got really weird transactions happening here in the after hour session, I'll admit that. You've got, all of a sudden, it jumped in from 1974, which is the bid, to 2189. Be interested to see the transactions here, because all these are red. Very, 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 very bad. Okay, so I'm bearish on those metals for tomorrow, particularly silver and gold. I think you'll see some bigger downside movement there. I did have a question that came through from, who was that from? Gene. Gene sent this question in today, so thank you, Gene. He says, thoughts on GameStop today? Burry is buying. I don't care about Michael Burry. So let's look at GME. Remember, Michael Burry also dissolved his hedge fund. He had to file documents with the SEC saying, I no longer want to be a hedge fund guy. And I think part of the reason his track record just wasn't that great. He didn't have the best record out there. So looking at GameStop, we've covered this one at length in the past, but I am not a fan of GameStop's business. I don't like what they're going or where they're going with it. So personally, there's really nothing you could say, Gene, to get me to buy into GameStop. To me, this is like an altcoin or a shitcoin in crypto, where people are using it as a pump and dump vehicle. It's a meme stock, right? It doesn't really. I mean, how many of you have gone to a GameStop store in the last 6 months? Probably nobody. I just can't. There used to be one on the corner, and I would go in there actually just to kind of see what they were doing, and there was never any customers in there. It's just they're going to die up and shrivel away. But Michael Burry is saying how great the model is, and da-da-da-da. Going away. The pawn shop for kids. That's a good way of looking at it. I like that. CoreWeave has more shorts on it than GameStop. In real time, I didn't check. I don't usually look at short interest anymore because it's just, I feel like it's a target market for pump and dumpers. But CoreWeave, let me finish the thoughts on Gene's here. Not interested in GameStop. I don't care what Michael Burry does. But that's just me. If you want, tread with caution on GameStop. So here's CoreWeave. CoreWeave had a pretty big day, up 5.73%. You had, if I remember correctly, what I think NVIDIA said they're going to pump another $2 billion into CoreWeave, which caused that big gap up today. I could understand. Big Eb says CoreWeave has more shorts on it than GameStop. I have to trust but verify that one, but I trust Big Eb. You look at this. For all intents and purposes, forget about the short interest, it actually looks fairly decent here. You're starting to make higher lows and higher highs, at least from this bottom that we achieved back in middle of December. I was doing some option strategies on the wheel strategy with this one back in November, and this one cost me some good money right here from November 11th through like the 13th or 14th. That one cost me a pretty chunk of change and was one of my worst losers for last year, so I'm a little bit gun shy on CoreWeave. But the premium was absolutely fantastic. CoreWeave is one of those companies that seems to be wrapped up in the whole NVIDIA saving them, right? NVIDIA just buying back into companies, investing in companies, and then those companies buying NVIDIA's products and services, and just kind of this, self-feeding cycle that NVIDIA has been creating with so many different companies, and CoreWeave is definitely one of those. So as far as short interest, I could see why a lot of people would be shorting it. The problem I see is going to be a lot of people are probably going to start shorting not just CoreWeave, but a lot of these AI companies that get overheated and overvalued. This week is a great week. There is so much to discuss this week. We have major Magnificent Seven stocks reporting. You've got Microsoft, you've got Apple, you have Meta. A lot of companies reporting this week. And then on Friday, we may get another government shutdown or partial government shutdown starting this Friday, which creates more undue volatility for markets. To my surprise, we had a nice positive day today for the S&P 500. I actually was expecting, as I mentioned on Friday's show, more international tension and turmoil. And I just, taking a bit of a flyer with that S&P short just because you're going into the earnings week. And most likely those companies are going to say very rosy things about the market. That's just a higher probability there. So definitely sticking my neck out there, but I'm in the camp of I think you're going to see some big bad geopolitical stuff happen. But we shall wait and see. I got about a month left till those options expire at 666. Louis says still a lot of rumors, no return on investment from AI. I wouldn't say no return on investment. Some of these companies are definitely getting investment and are getting returns on it, but does it equal their capital outlay, their CapEx spending? Most people are not getting it, but this is also something that's going to take time. There is the implementation of AI, and I've been watching watching these videos about Claude agents and what that might be able to do for people and help efficiencies from your own personal productivity perspective, but also incorporating those into your business model if you're running a business. So no, there was not a lot of volume on the 666 strikes, Big Eb, and it just because it was pretty far out of the money and it's short term. I just love the number. I really went with it because of the number. It's one of those trades. I just expect the market to have a bit of a jolt pullback, not a prolonged one. So when I get a 5% down week or day, I'll probably close those out at a profit. I have no expectation of holding those till expiration. Those will be done early, so it didn't matter to me too much on it. But yeah, very low volume on that strike of 666. People just don't like that number. Little evil number there. So there's your core weave. Most of the market, except for crypto and maybe crude oil, was okay today. Today, here's your Bitcoin price chart. Over the weekend, it was actually selling off a little bit, not looking so good. Bitcoin right now at 87,585, and there's a line on my screen in the futures side of things, and I'll change this for the viewers that are, for the people who don't look at the futures market, but that 80,750 mark is pretty critical for Bitcoin. Now, if you go to the spot price, it's a little better. Let's see, that low end there is 80,007. So actually it's slightly lower. 80,619 is the tail that we saw back on November 21st. That's that low point. And we had mapped out this little channel here, which was nice and somewhat traversing upward. And now it's just not there. It just doesn't, we broke down below that lower part. Not a good sign for anybody who's bullish on Bitcoin. So for us, you really got to keep your eye on that lower level of 80,619. Yeah, it did. It broke that swing low, and that's not a good sign, Rob. I was feeling pretty confident that we were holding and slightly moving up, but yeah, didn't hold. It's interesting because we're seeing that there's always that flow of money, and as I mentioned many times with you guys before, I would expect to see, if you had big days like today for metals, well, I would expect to see that dollar dropping. And lo and behold, we did get that dollar dropping fairly aggressively over the last 5 days, by the way. We've gone from about 99.50 all the way down to a low of 97. So this is very important. That would lead me to believe we're going to see this dollar continue to go down. We're headed towards the demand zone on this screen. Actually, I won't say demand zone. Let's just say some recent lows, because I don't think that this is that great of a demand zone here. Let me draw it out for you. That low point that we've established really for the past couple of years is right around, hold on. I'm trying to mute my mic when I cough in your ear. To 96.61 all the way down to 96.21. So you got a 40-cent range there, the lower end, which we are racing towards right now. And it's a big change because back in November, it really felt like we were starting to find a footing. We were making higher highs, higher lows, and then that broke. And our trend now seems to be to the downside here for the dollar index. Now, if this dollar index does continue to drop, that's going to be bullish for metals. And it shouldn't really be that bullish for the dollar, but, sorry, not for the dollar, except for the equity markets, but you're seeing both of them, those things rally. I didn't catch the cold in Thailand. No, I was back when I came back. It's funny, Jeff. I think as soon as I came back from Thailand, which is 2 weeks ago now, I went right back into the gym, and I work out at a circuit training gym where everybody's touching the same weights. I think that's where I got this little cold from. It's nothing that bad. It's just my cough has been terrible, horrible cough, annoying. Those persistent ones, the kind of cough where you're just having a great conversation, you feel 100% fine, all of a sudden it's just like that little needle pokes you and you got a cough. That's what I got. We'll make it better. We'll get there. We're on the mend. We can do it. I've got faith. I can do it. Okay, so I would expect that dollar index to be a catalyst for metals. Again, if we come into this lower area and bounce off of that, that would further support a bearish position on metals. So we'll see how that bounces from there. I always wash my hands, buddy. Every single time. I'm going to move up this ladder starting from Bitcoin and go to crude oil here. So we got crude oil, which, with that falling dollar, you had crude oil drop today, 0.72. I thought it would actually be a little bit higher, but of course, crude oil impacted significantly by supply and demand. From the chart perspective, we're still in this big sideways range between these two yellow sandwiches I drew out, last month sometime, between, let's call it $62 and $57. So until we break out of that, not really much to talk about here with crude oil. Now the 10-year, I like the picture here. We had it break above that 4.2%. You guys might remember we were talking about this one for a month or two. We had this head and shoulders pattern somebody pointed out. We were just kind of sitting at 4.2. Well, we broke above that on January 16th, and now you're getting the retest. So if this is in fact doing what it looks like it's doing, it broke that downtrend because we've broken above it. So that line's gone. It's also retesting a breakout today. Now, if it follows traditional, typical, high probability breakout scenarios, it pulls back, it retests this level at 4.2%, and then will continue to rally to the upside. Given what's gone on in Japan, I know some of you have been talking about the Japanese bond yields, which were surging. Let me see if I can get the 10-year up here. Let's go JP. Let's do the 30-year. Look at the spike in the yield on the Japanese government bonds. It was wild. This was definitely a major talk track last week, which we talked about briefly. But watching those yields on the Japanese 30-year go from 4.3% up to 3.4% up to 3.9. I mean, you're talking 50 basis point jump in almost just 2 days. That was really wild, and it can, as Big Eb says, that can have a huge impact on things. And this is just kind of like a seismic event, right? It may not seem that dramatic, but bonds are way more impactful than equity markets. So having a bond product move that much without really a rate decision is wild. So this is definitely concerning for the markets. And why is it? Part of the financial world believes that Japan may have problems with their debt and not be able to pay their debt. And I'm looking in the mirror as the U.S. government going, hey, pot calling the kettle black over here because we're in a pretty bad situation from a debt perspective as well. Now, you line that up with a government potential shutdown this Friday, that just creates more uncertainty for the markets. And, if this talk track, I don't know where you guys stand. How many of you think that let me do a poll. Let's see. Let me do a poll. Is the U.S. in a major, all caps, major financial problem, FIAL? I'm just gonna give you that poll. Simple yes or no. Do you think that the U.S. government is in a major financial problem? Just yes or no. I'm just curious, because we're funding everything with debt, more and more debt. Whether you want to build Trump's wall or you tariff, which generates some income, but we, the taxpayers, are the ones ultimately paying the cost because businesses will raise the cost of those goods and services. So our prices are rising. The government has taken on the highest level of debt it has ever had in the course of history. And in order to do that, they issue more bonds. So if it comes into question, if it calls into question that the U.S. government may not pay back some of its debt or have a default, those yields are going to do something similar to what we saw with the Japanese yen, which is a big surge. Now, this was just speculation. I don't think Japan's going to default. But here's the U.S. 10-year. What happens if we follow the same suit? Like, can you imagine if tomorrow we go from 4.21 to 4.6 in, let's say, 2 days, right? This market would be in chaos. The equity markets would actually just plummet because it means the cost of capital is surging and businesses won't be able to grow and expand as they did before. So there's a lot riding on this 10-year right now. I think this may be one of the more important pieces for the year, is just watching what happens with the 10-year bond. I was, and you guys all know, I'm happy to admit when I'm wrong, I was bearish on this 10-year until about 2 weeks ago. And the reason for that is we were making lower highs, and that all changed on January 16th, and we already have a short-term uptrend in place. So, Brush Day says, isn't China not buying any bonds? I don't believe they're not buying any bonds, but they've significantly cut back, as most countries have, cut back on their U.S. bond consumption, right? Well, especially these countries that are taking payments in currencies other than U.S. dollars. Like, why do I need to sell if you're Saudi Arabia, how come you have to sell your oil in dollars? Why can't, if I'm Saudi Arabia, I'll have a currency exchange in my own country, and I will say, hey, Russia, you want to pay in rubles? Great. I'll do the currency conversion there. I'm also going to charge you 2% for that currency conversion so I can get it in my currency. Hey, China, you want to pay yuan? Great. But right now, because the U.S., oil is priced in dollars. That's all going to change, I think. And that gives a loss of power to the United States. Now, what does that mean? As Candle Swinger says, breakout retest. Yep, exactly. We broke out, we retested. Now the question is, do we bounce from here? Well, and obviously we don't know. My high probability, or my statistical studies of this type would tell me we are going to bounce here on this 10-year and start to rally back up. If we do continue this uptrend and head higher, remember, that puts significant pressure on the equity markets because it means the cost of capital, money, is getting more expensive. So definitely keep your eye on this one. I'll be talking about it as it progresses and unfolds going into 2026. So this is a big story, right? The trend is beginning to form here to the upside, showing strength, cost of capital going higher, and there's a lot of talk about our government having issues. And according to the room here, 76% of you said that the government is a major financial problem. 24% said no, and those 24% are probably of the mindset that they'll just print money. They'll just keep printing money. That doesn't fix the idea that they have a major financial problem. I mean, if you go out here and you go to the U.S. debt clock, this is such a great website. You go to the U.S. debt clock, if you want to get depressed, really, and just watch this. If you look at U.S. national debt, we're at $38 trillion. That means per citizen, not per taxpayer, but per citizen, we are each in debt $112,730. If you're a taxpayer, that's $355,000. Most people don't even have a net worth of $355,000. Little do you know the government is owing that much in national debt because of you. $355,810. And this is why we get economy growth. And I think the part that's scary here is look at the trend of federal debt to GDP ratio. Right? 1960 was 53%. 1980 was 35%. All right, that's good. Well, low debt to GDP. Then it started to pick back up in 2000 to 59%. And now, just another 20 years later, we're at 124. Right? This is pretty bad for markets. Now, you talk about total U.S. debt. Look at U.S. total debt. 103. This is 103. Hundreds, thousands, millions, billions, trillions. $106 trillion worth of debt. Wild. Absolutely wild. Like this should be depressing right here. This is such a great page. It has so much, and I'm sure that there's a margin of error for a lot of this. However, we are paying on our debt. I think this is an annual number. We're paying, you can see here, it's $986 billion that we're paying on interest on our debt. Just interest. So those 24% of you that said we don't have a major financial problem, I would encourage you to check out thedebtclock.com and tell me where we're doing well financially as a government. Is that for mortgages and credit cards? A lot. I think it's all of it, right? And certainly mortgages are going to be a big piece of this, right? I mean, most people are going to have some sort of mortgage. Too much debt for each person, Rob? Totally agree with you. But, if you look at what makes America so great, it's spending. We have one of the highest, standard of livings, especially if you're like me and travel through Southeast Asia, you realize how some other people are living with, $100 a month. You're like, I spend $100 a day. Well, different parts of the world operate very differently, and we've come accustomed to a lot of the services and parks and amenities that America affords us. And a lot of that is coming because of debt. So it'll be an interesting one here soon. I was, I guess, too young to really understand all of this from a full business cycle machine. But I remember under Bill Clinton, we actually had a budget surplus. And I think that might be the last time I'll ever hear those words ever uttered. The beauty of having zero debt? Exactly. I would say I'm very proud that I'm 100% debt-free, Sweeney, but obviously I have a mortgage. So I am not 100% debt-free. From a credit card perspective, from a car loan perspective, I have no other debt whatsoever other than mortgages. So that's it. Affording to date American women. Jeff, that's funny. So my friend that I traveled to Thailand with, that's one of his big problems. He doesn't make a lot of money. He's on disability. And his complaint is that women won't date him because he doesn't make a lot of money. I'm like, they should be dating you for your personality and who you are. You're a great person, but no revolving debt for you. Yep. Good job, Marcia. It's the way it should be. It's the way it should be. A big part of the book I'm writing is all about that, and I have conversations with so many friends. I'm sure each of you do as well. It's hard when we get older to have a conversation with someone about that, and when you see someone that's in their 20s, it's easy to understand how they put themselves in debt, right? They don't understand fiscal responsibility. But when you get into your 40s and 50s, like you should really understand that your credit card should have a balance of 0 every month, right? Oh, I know, Big Ab. I'm just gonna hide my face on that one. I've actually been working on it. Hey, I've been working on it. We're working on Big Ab. Let me ask you guys a question. So the book I'm writing, for me, wealth is all encompassing as a topic, but I kind of broke this down into 2 separate things. The first book was just personal finance, wealth, budgeting, expense, knowing how to put yourself in a positive position and having actionable steps that you can say, okay, I can bite off this chunk for the next 3 months until I can get to the second and third and fourth. That was kind of what one book was, because until you can actually have money to spend, there's no way you're going to be investing in the stock market or in crypto and things like that. So would you guys rather see 2 separate smaller books, one on personal finance and one on investments? Or should it just be one encompassing book? I don't know. I'm struggling with that piece right there in combining those 2, because I wanted to do it where one book definitively ends. It's like, okay, well, now you have enough money every month that you can actually invest with. Look for book 2, which is take that and now let's start growing your investment worth. But I'm just curious. One big book. Go for it. Do both. One big, beautiful book. Maybe that's what I'll call it. The one big, beautiful book. All right. I have 3 out of 4. It'll be an ebook too, but I'll probably do an audiobook read by me because I just like my cynical way of reading things. But Rob, to be clear, very clear, this book is not about money. It's not about money. I think life is about accomplishments and the things you do, and kind of having goals to strive for. I want to see if I don't make $1 off the book, it's fine with me. I want to release the book and know that, or at least hope that somebody who's read that book will have changed their life and implied what's in it, which is life lessons about personal finance, about growth, and at a minimum, gotten themselves out of debt and put themselves in a positive position. At a maximum, really started thinking about their investments, growing their net worth, their capital, so they can afford the life that they want. That's the goal. No, it's going to be for sale. The book will be for sale, but advice I would appreciate 2 books so I can give my kids. Great, free for all. Well, I gotta sell it. I have to have a price on it. Excuse me. That's true, Lisa. Money can't buy happiness. Visa's gonna put a hit out on you. Hey, you know what? If people just followed some extremely simple rules, these credit card companies would be out of business. And clearly, this is the part that just should make us all feel really bad. You look at a chart like Visa. Visa's on a pullback right now, but look at the long-term chart. Let me pull up a weekly of Visa and MasterCard so you can get a real perspective of it. I mean, where do you think they're making that profit off of? This is interest. This is off the backbone of, I apologize if this sounds condescending, this is off the backbone of uneducated Americans that don't understand how credit cards work, or number 2, it's off the backbone of people who are in financial crisis and are living beyond their means. 3, it's people who are in a financial crisis and are doing this just to survive. And I think that this is usurious. You heard President Trump talking about putting a 10% cap on credit cards. That's great because it'll eat into these companies' profits. But what's going to happen is Visa, when and if there's a cap on credit card fees, 10%, let's say. What that means is your credit card company is now going to be much more selective on who they issue credit cards to. So many people who had credit cards before and neglected them and abused them will no longer have access to credit. And that could put people who are in financial straits, dire straits, in a much more precarious situation financially. So I don't know. Not sure which way this is going to go, but this should tell you right away that Americans are irresponsible with their spending. I mean, this just tells that's how they're making their money. And you look at something, here's MasterCard. That's not MasterCard. What's I thought MasterCard was MC. Master MA. It's close. And there's MasterCard. I mean, this chart is not much. I mean, that's almost identical. Oh, yeah, wild. It's wild that these credit cards can do it. I mean, you look at the maximum APRs. I don't know what they are today. But you look at some of these creditcard.com let's just go to like your rewards cards here, right? So I'm going to go to one that I like, which is a travel card. Let's go to travel card. All right, I'll go grab a travel. It says your best one here. I'm already on the page. Best for flexible travel, Capital and Venture. You have the American Express Gold, but you click on the details of it. Let's see. Some of these card details. All right, they can sting you up to, this is $325 a year, and it doesn't give you their AP. Oh, there they are. They're not showing you their regular APRs, so it's pay over time with those. But let's do the Capital one. 18.49% up to 28%. I mean, 28% is just ridiculous. You'll never get off from underneath it. Same thing with Chase Sapphire, which is actually a great card. $95 annual fee. You get 75,000 bonus points, so definitely some opportunity there. Anyway, we shifted the show into a credit card and debt speech. I'll make it all one big book. I've definitely got the first part 95% done. The second part I'm going to write out, but we'll get there. You'll still get your signed copy, Jeff. Absolutely. It'd be fun if I could do like a book tour. That'd be great. Now do the banks. Yeah, isn't it funny? If you look at the banks, by the way, Alex, where are they making their money? Well, they also have relationships and get part of the fees that are generated from MasterCard and Visa. But if you look at something like JP Morgan, JP Morgan's been absolutely phenomenal. Back here on March 23rd, you guys might remember this. I wrote an article for barchart.com. It says this is one of the positions I own right now. That was $127, and now we're at $300. JP Morgan looking great, but JP Morgan is a much more dynamic business than Visa would, right? I think it's just a much more broad base. You can look at BAC, Bank of America. Financials have been doing rather well, although the pullback over the past couple weeks has been significant. Let's look at WFC. I mean, we could go on and on and on, but yeah, financials have been doing absolutely fantastic. Absolutely fantastic. It's crazy. All right. Let's see, what else do I have to cover here today? No new positions. I still have my Tesla shorts. The Amazon one is out, and I'm short Tesla puts at 432.50. That did not look good today. Made me a little bit nervous. I was kind of anticipating getting out before they reported earnings this week, which should be Thursday after market close. So I may dump this one first. I did not expect Tesla to have such a big down day today. Here's your daily chart of it. It was pretty bad. Closing near the low, so not a great looking day for Tesla. I'm just a couple bucks away from the strike price where I'm going to be exercised at. But long term, I'm okay with it. It's not a monster position. I just have 5 of the contracts there, so only $200,000 position. Yeah, big day, big down day today. Lots of cars and airplanes sold. Well, talking about durable goods, let's take a peek at that, because that was an interesting one today. That kind of surprised a lot of people. You look at the durable goods orders. We were at negative 2.1%, and everyone anticipated a jump up to 3.1%. We came out at 5.3%. When you have durable goods core, which is this number up here, you can read here, it takes out transportation. So cars and airplanes go out. It looks like cars and airplanes may have been the saving grace for durable goods orders and pushing those numbers much, much higher. So that's a great number. That's nice to see spending coming in like that. So yeah, we got a first good piece of economic data, and that's going to be your durable goods orders. Remember, tomorrow, there are a couple other really important ones, and I for one am very closely watching this S&P Case-Shiller Composite 20 Home Price Index. It's one of the longest title names out there in all of the financial world. But look at the chart of this one. I am genuinely concerned because as a consumer, right, anybody here who owns a home, all of us that own homes, you buy a home for one primary reason, but there's certainly a secondary reason to it. Number one is I want to put a roof over my head for myself and my family, period. That's number one. Number two is I'm investing in something. I'm buying a property, and historically real estate appreciates at a certain clip per year. Those numbers fluctuate depending on who you talk to, but I would argue it's somewhere between 5 and 6% historically is the average annual growth rate for real estate compounding over time. I know those numbers are going to be different, but it's not as good as the S&P. But let's say 5 to 6%. So knowing that over time, you would assume that your investment in your property while you're living in it, paying your mortgage, all the maintenance, and taking those deductions, is you're going to be growing at about 5 to 6%. So as long as inflation stays under 5%, you're like, okay, fine. I'm still going to be making money. Here's our problem. Look at the S&P Case-Shiller Composite 20 Home Price Index. Right now, it is in a extremely clear trend. I will zoom in here a little bit so we can see how pronounced this is. But we have peaked in May of 2024 at 7.4% per year growth. This is year over year growth, by the way. Ever since we peaked in May of 2024, every month we have dropped, meaning the year over year rate of return increase on property in those 20 major metropolitan areas has dropped. And right now, you're looking at 1.3% growth. Why is this so bad? Well, think of it as an investor. If you're someone who wants to invest in real estate, you're obviously going to be looking for markets that are appreciating, right? You'd like to buy into a market, unless it's like been in free fall and bottomed out, right? You want to buy, pick the bottom. I was fortunate enough in my neighborhood to pick the bottom of this market. I only knew that in hindsight, but it was a very good deal at the time. Right now, we have overpriced housing markets. A lot of markets are very expensive. I don't know how it is in other areas of the United States. I know more about right here because that's where I'm at. But you have in Orange County elevated housing prices. And if they're not appreciating, what do you think this is going to tell potential buyers? Like, well, they're not going up, so maybe I'll hold off on buying something. And what this could do is bring in more sellers into the market. We'll see what those numbers look like over the next few months. But right now, the expectation is that we're going to go from 1.3 down to 1.2% annually annual growth rate. That's not good. That's pretty disappointing. Let me zoom out and see what the longest time frame I can show you on this table is. I think I can go back to 2009, 2007. You can see there's definitely points where we are down below zero, but for the most part, we should be well above zero. And this is concerning because, as you guys know, my mantra, the trend is your friend till the bend at the end. That doesn't get much clearer than that. That trend is strong to the downside, and that's a nervous one. So it's not like tomorrow's data, which happens at 9 a.m. Eastern time, so it'll be a half hour before the equity markets open. It's not like this is a, epic piece that's going to cause major catastrophe in the market. But that trend could start to have an impact on our markets going forward. Other news for tomorrow, you've got CB Consumer Confidence. You also have the Richmond Manufacturing Index. And President Trump will be speaking at 2 p.m. Eastern Time. So that's going to be 2 hours before the markets close. So keep your eye on that one because, of course, anything that man says can cause major moves in the market. You just never know. Dan says, Charlotte area is still climbing. Can't build them fast enough around here. And, that's the thing. County. I'm sorry, I'm trying to say two words at once. Counties are building a lot, but if there is no price appreciation, the incentive for buyers to come in is not there, especially if prices are higher. Kid, your Kalshi mentioned bids and now. Oh man, that Kalshi app is hilarious, man. I don't know if anybody here is using that stuff. I've been playing with it all weekend. I have all kinds of bets on the games. That was good. And by the way, Mike, am I back to 0 beers? We can still go have a beer before one of the mastermind meetups that you go to, but Seahawks definitely, that was a great game against the Rams. Good game. Great game. The good news is on Kalshi, I made a bet, 3 weeks or 4 weeks ago, that the New England Patriots were going to win the Super Bowl and the Seattle Seahawks were going to win the Super Bowl. So now I have both teams in, so I'm guaranteed to win one of my bets. Pretty happy about that. All right. Let's see. 11 a.m. before market close. So you're better off buying Strike and getting 11% annually. No, you're not really. So you could look at something like STRC, right? So here's STRC. And let me zoom out here, right? And this is still a fairly young investment. And I'll be honest, and Mickey, I'm sure you have your perspective on this as well. It makes me very nervous what MicroStrategy is doing with all their products, right? Trying to generate revenue so they can buy more Bitcoin. I still am in the camp of I don't trust MicroStrategy because they've kind of obfuscated where their Bitcoin is. Yes, they have some at Coinbase. Yes, they have some at Fidelity. But it's very unclear exactly what they really hold, other than what Michael Saylor tells us. Now, they file with the SEC a certain document that says that they own this amount of Bitcoin, but the reality is I believe it's paper Bitcoin. So this house of cards that MicroStrategy is building up makes me nervous. And, you're saying this one's getting 11%. That number is going to change wildly depending on fluctuations. Now, there are some guaranteed rates of return. That's true. They do have 2+ years dividends in cash. And I forgot the number of billions. But they also are very locked into the price of Bitcoin and made to be forced liquidations, which Michael Saylor has addressed in the past, if we get past a certain value, which is why looking at this chart here is so important, because if we get down below, I believe the number was 69,400 was one of their big liquidation points. Even, well, there's always a chance, Mickey, but if we get down below 69, some of the loan conditions for his collateralized loans he's using Bitcoin for had provisions for somewhere in 69 or 67,000 as a liquidation price. Now, I'm sure terms will be renegotiated if it got down to those levels, but it does start to put MicroStrategy on thin ice. And remember, they've got 4 different products out there right now, which makes me a bit nervous. Do I have a Bitcoin downside target? Well, look, it's so tricky to say because there is a very defined 4-year cycle on Bitcoin. I do believe this time is different, which is why I did not sell my Bitcoin and I didn't sell any of my crypto except Monero. I got out all my Monero. Where's the target? It'd be those 2 yellow boxes to start with. It is interesting that when you look at these yellow boxes, and let me just read them out for the audience here that's listening in podcasts. Actually, I'll tighten this up here and go to the daily one. The immediate level is really that low we established back in November, which is 82,900 down to 80,617. That's not great. I think that level is going to hold, but if that breaks, I think you'll see a very quick move, which is going to challenge those lows that go all the way back to our April lows. And if we get below that, then I think we're in real trouble because it's one of those ones where people are looking for prior lows to hold, and really the next major low you have is down around 68,000. So those are cascading levels. If we do put the 4-year cycle on here, and that's something I've looked at a bunch, Marcia, it does put Bitcoin, if you go off historical norms, it does put Bitcoin down at around 37,000. But I don't think that the 4-year cycle is going to have the same impact this year. Again, I think that the president's going to put a stop to that because he has so much money riding on Bitcoin. Anything can happen, not probable. Agreed. Everything works until it doesn't. Exactly. And, you got to go with it. Just the more I look, and the more I love what Michael Saylor is doing. Don't get me wrong, Mickey. I think it's phenomenal, especially because I'm bullish on Bitcoin. You got to love Michael Saylor. I mean, if you're a Bitcoin maxi, someone who loves Bitcoin, go get yourself a MicroStrategy tattoo because you just got to love him. He's pushing that price up. My only concern is how real are his purchases, right? He just said last week, buy another $2 billion. Bought another $2 billion, but there was no action on the blockchain that tracked $2 billion transaction. And where'd those $2 billion worth of Bitcoin go? Until I see the wallet addresses like 21 Capital does, I'm not comfortable with it. Your entire business revolves around Bitcoin, but you can't tell people where your Bitcoin is. It's controlled by private keys. You can show anyone your address, right? I could go out there right now and tell everyone my Bitcoin addresses. You can all look at my Bitcoin address. I don't care. Go ahead and look at my Bitcoin address. And if you look at this one right here, this is the part that also has me confused. Remember, Michael Saylor has over 700,000 Bitcoin, yet the largest wallet address in the world is only 248,000. And look who that is. Right there. That's Binance. So Binance are the number 1 wallet and number 2 wallet. There's no risk to expose your address here. You're not going to brute force these wallet addresses. It's mathematically impossible. None of these addresses are attributed to Michael Saylor. No, I don't think that his 8Ks are fraudulent. I think what happens, Mickey, is just like when you deposit your $10,000 in the bank, your $10,000 is not there. Your $10,000 has been lent out to someone who borrowed that money, then deposited it back in, and rinse, wash, repeat. It's called fractional reserve lending. It's the staple of American banking system. So what I think happened is he goes to Fidelity or Coinbase and says, hey, I want to buy $1 billion worth of Bitcoin. Coinbase looks and says, hey, how much do we have? They don't have all that Bitcoin. But what they're doing the exact same thing the banks are doing, which is saying, all right, Michael Saylor is saying he'll never pull this Bitcoin out. He says he's going to hold forever. Okay, great. So we don't have to worry about a run on the bank from Saylor. So what we can do is we can give him paper Bitcoin. There's no address. There's no private keys, public keys that Michael Saylor's holding on to. He's just with Coinbase saying, all right, I've got $1 billion there. I've got $2 billion over here at Fidelity who's doing the same thing because Fidelity's got a Bitcoin ETF, FBTC. So they could use that as fractional reserve banking collateral for his position. That's the part that scares me, right? Because we've seen runs on banks in crypto. You can look at Terra Luna, that was a run on the bank. You can look at Celsius, Voyager, and BlockFi, run on the bank. And all of those went bankrupt, which is why it makes me nervous, because not only is Michael Saylor such a big player with MicroStrategy, but now you have all these tangential assets that are being built around it. That makes me nervous. How many times did he borrow the same Bitcoin? Who knows? Who knows, Dan? Right? Because he buys $1 billion and then he goes and buys more. He may be buying his own Bitcoin. So the risk is actually on his custodians, whether that's Coinbase or Fidelity or whomever else. Yep. Time will tell. It's just, Mickey, as a trader, I'm just looking at things from a risk perspective. And don't get me wrong, I love trading the options on MicroStrategy. I just don't trust the company. I'm not a long-term guy that thinks the MicroStrategy is going to be the greatest thing ever. I'm looking at it going, it's generating me great premium in one of my accounts on a weekly basis. They can all go bankrupt? Sure they can. Absolutely. Absolutely. Coinbase could go bankrupt. Coinbase could go bankrupt. MicroStrategy could go bankrupt, even though they got billions in cash. If there's a significant drawdown, if Bitcoin does crash, okay, here, and let's hope this doesn't happen, please. If Bitcoin does go through that 4-year cycle, which would target right around 37,000, MicroStrategy is belly up. MicroStrategy is done. But I don't think we're going to get 37. I mean, that's all long distance stuff. So basically, he has the right to some Bitcoin. Maybe he doesn't own, but correct first. Yep, I think that's what it is. Hey, Big Eb, you know I've got a lot of exposure to it as well with Bitcoin, right? And there's one of two camps here as far as what's going to happen. Think about this. If Michael Saylor wanted to do the right thing, what he should do is take all that Bitcoin and put it on a cold storage wallet. Grab himself a ledger, put everything on there, and take it off the exchanges. If that were to happen, all of a sudden Coinbase would be scrambling to find enough liquidity to buy the Bitcoin to give him. So if Michael Saylor were to take off, let's say, 10,000 Bitcoin a week off of Coinbase, you would see the price just start to rip and 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 move to the upside. If he did it all at once, it would collapse the system, and I think Coinbase would go bankrupt. So he would never do that. But all kinds of speculation. What are the chances Bitcoin goes bankrupt? Yeah, Bitcoin's not going to go bankrupt. There could be a lack of confidence and disbelief that Bitcoin has any purpose or utility, which a lot of people believe, and that would maybe force some people to sell. But you'll always have people who are diamond hand holders of Bitcoin. Yeah. Bitcoin won't go bankrupt because it's not a business. It can go to zero. Yep, can go to zero. All right, my throat was like this. It said, Merlin, you're starting the hourglass today for a 44-minute and 53-second show, and I'm already past that. Dab nabbit. All right, let me wrap this up before we get too long. My throat is already killing me. For tomorrow, we already talked about some of the major economic announcements. You have ADP weekly employment change. You have the HPI numbers, the S&P Case-Shiller Composite 20 Home Price Index. I think that is a very interesting one. Again, this is not a one-point data piece. It's the big trend overall. If we drop anything below 1.2, I think this just casts a real negative sign for the housing market. And, of course, that's a big driver of GDP and growth. So we'll keep our eyes on that one. Also on the earnings calendar, we do start to get some big names tomorrow. None of the Magnificent Seven, but you've got your Moet, Hennessy, Louis Vuitton. You got United Health Group, RTX, Boeing, Texas Instruments, NextEra Energy, Union Pacific, HCA Healthcare, Northrop Grumman, UPS, General Motors, Seagate. I mean, there's so many big names reporting tomorrow. And of course, if you need some toilet paper, you've always got Kimberly-Clark. There you go. So that's your big announcements for tomorrow on the economic and earnings announcement front. I'm not sure it's the right look. You know, I just grabbed the first one that was around me because my hair is just in such a mess today. Yeah, let's talk about United Health. I was actually looking at selling some puts on UNH because I still am bullish on UNH, but it just hasn't had that big follow through. Right? We were talking about this back in July last year when it was down right around that 250 mark, and what a great opportunity. And here we've come up $100 per share. But the trend actually looks pretty good right now, even though it's down 8%. Did they actually report tonight? I thought they were supposed to report before market open tomorrow. So maybe something got leaked here. Let's look at the calendar. It should be BMO. Yeah, something got leaked. Boy, you want to talk about insider trading? That's about as clear as you get. Right now, it's down 8% in the after-hour session for United Health Group, and they don't report until tomorrow. So someone, either they released it now or someone leaked it early and is going to get in trouble on this one. Not good. Trump news for UNH. Well, it's not good going into earnings. Well, we'll see what happens with it tomorrow. They're down $31 per share, like almost 9%, and they report before market open tomorrow. So I still am a fan long-term of them. Definitely something long-term on them. Sell puts on Intel. We talked about that one, and it was more like I wanted it to keep falling, right? I think we talked about it filling this gap right here, which was at 44. It's now down below that and falling even more. It's at 42.17 right now. You know, where would that next logical buy point be? I don't know. Maybe do I sell the $40 strikes on this one? Maybe. I could see selling some puts on Intel. Yeah, I could see selling some puts on Intel. We were at $54 just 3 days ago, and here we are now at 42. Intel's not going to go away. They can struggle and have some problems, but I think the government's going to stand behind them and keep pushing them. So there we go. All right, that's gonna do it for me, guys. I got to wrap up. My throat is killing me. I need another Ricola here, and I don't want to torture you with that sound of a Ricola wrecking across my teeth. So tomorrow I have a presentation I'm giving, and that's going to be, I hope I have it here. Yeah, there it is. So I'm doing a virtual expo tomorrow for the Money Show. If you guys will be around for that one, I'm going to be doing that at, it's actually at 12:55. I'll post the link in the chat if you guys would like. It's a free one, so for those who want to attend it, you're more than welcome to join. It's just talking about scams in crypto, which, again, there's many of them, but that is the registration page for that. That's at 12:55. I'm not going to be doing a show tomorrow because I don't have the time in my schedule to do enough research to do a show for you guys tomorrow. Given I'm doing this thing. So no show tomorrow. My apologies for that. But Wednesday, I'll be back with Bill Addis. We're going to talk interest rates. We'll talk Fed. We'll talk what's going on with Jerome Powell and what he thinks of the bond market and, of course, his market outlook going forward. So there we go. That's going to do it for me, everybody. Hope you have a fantastic remainder of your day. Drink a lot of water like I'm going to, and I'll see you guys tomorrow. Take care.